And looks like we are live. Hello everyone, welcome to the show. Welcome to Milan's Briefs. And in today's live stream, we're going to go over a few number of news here. Not a whole lot occurred today. So we're going to go into a couple of big things that occurred in the market. Obviously, stocks fell dramatically. S&P dropped over 1%. It was, let's see right here on the side of my screen, over 1% it dropped. The Dow dropped about a half a percentage point. NASDAQ 2% drop, which is heavy in tech, so it makes sense. And the Russell almost 2% as well. And the biggest reasons that why the stocks market dropped today was because of the potential that the valuation is overdrawn when it comes to tech stocks. So for those of you who don't know, tech stocks have been the major reason why the stock market has been hitting all-time records for the past year or so. And we're going to get into it, like why that's the case. Despite lots of skepticism in the overall economy, such as the job market, such as the housing market, elevated prices and inflation due to tariffs, and uncertainty in the government. The government shutdown hit 35 days today, tying an all-time record in United States history. So despite all of this, the stock market has been continuously hitting all-time records continuously for the last few months to almost a year. And we're going to investigate why that is, why that's the case. And so we're going to get into that and what a big-time investor has to say about betting against Palantir and NVIDIA. So if all this news interests you a little bit or more, please like, share, subscribe to the channel, comment your thoughts below, and we're going to get right into it. So as you can see here, this is some of the data from the stock market. Cryptocurrencies also fell below 100,000. The Bitcoin for the first time ever, or excuse me, for the first time since June. It's not forever. And one of the biggest reasons for that is because NVIDIA and Palantir took a major hit today. As you can see here, NVIDIA was -8 in dropping in price, and Palantir was -16 points in dropping. And why is this the case? So let's get into this right here. This is according to a Yahoo Finance article. Wall Street is growing nervous that companies aren't performing well enough to justify their high-riding market valuations, prompting big bank CEOs to flag a likely correction ahead. So we pretty much saw a slight correction today with many major stocks, almost all the tech stocks that I follow, like Google, Palantir, NVIDIA, etc., and many more, all dropped today. So let's understand why. So why are big bank CEOs flagging a correction? Let's get into this article here. So Wall Street executives said investors should brace for an equity market drop of more than 10% in the next 12 to 24 months. So this is nothing. This is not a huge, what's the word? This isn't a surprise because a market correction around the fall to winter time is usually natural when it comes to the stock market. However, what's sort of unnatural or sort of what more inauthentic is the sharp rise that we've seen in the stock market due to Palantir, NVIDIA, and the rise in AI chip manufacturing stocks really boosting the stock market ever since the Liberation Day tariffs back in April. So let's get into this. What are the CEOs saying? Let's see if I can play the video here, and we'll see what Goldman CEO Solomon has to say about this.
Most developed economies are running very, very aggressive fiscal plays, and that underlies economic strength and forward momentum. And so I think it's a pretty constructive environment. Give you lots of things that could go wrong, but at the moment, those don't seem likely in the short-term distribution of outcomes. But of course, it is likely there'll be a 10 to 20% drawdown in equity markets sometime in the next 12 to 24 months. And I'd say there are very few people in this room that don't think that that's a meaningful possibility. It doesn't mean that the general direction of capital flows, investment, portfolio allocations changing. It just means things run and then they pull back so people can reassess.
And also, usually when the stock market drops considerably, it's an opportunity as an investor to double down on companies that you are highly confident in and get better prices for stocks. And so you can increase your portfolio in the long run.
Diversification is still, diversifying from the public market is still part of the theme going forward.
Yeah, I think the theme is important. And importantly, when you think about some of the developments that folks on this stage are looking at, where they can have strategies that incorporate some of the best of public and private investing in a single product, that could be interesting. But diversifying amongst the private asset class and best of breed and having hygiene around diligence, really knowing where those asset managers have excellence is important. And then obviously layering into that over the long span of time.
Is it all sustainable going into 26? We tend to think of 2036 more than 2026.
Okay, so we understand the point here from the CEOs. Pretty much this is a given that the market will drop considerably, most likely, since it's been so high for the last 6 to 9 months of 2025. So now why is this happening? So let's go into an article that I found today by Michael Burry of The Big Short. Pretty famous for that. Discloses bets against Palantir and Nvidia. So why is that the case? Excuse me, it's freezing up here a little bit. Okay. Anyway, so the reason, okay, here we go. Now it's coming on. So Burry, who rose to fame correctly, predicted the U.S. housing market bubble and subsequent stock crash back in 2008, has taken out puts or trades that benefit from a stock price falling on two big tech darlings. And if those of you don't know what a put is when you benefit from a stock market price falling. And this is called a long put. When you put in a long put contract, you have to be very wealthy to do these contracts because you have to buy 100 shares in a contract, per contract. You cannot buy less than 100 shares. So for example, when you have a brokerage like Robinhood, where you can buy $1 of a stock if you wanted to, as little as $1 of Google or Apple or Netflix or whomever, whichever stock. With options contracts, that doesn't work the same way. What you have to do is buy at least one contract that includes 100 shares, have the capital to support that. And let's say you sort of, I hate to say bet because it's not betting or like gambling, but it's timing the market and you doing stock analysis or technical analysis to analyze when you believe a market price will fall to a certain point, given from a 30 to 60 day schedule. And so this is what this is about. And Burry, who's a pretty successful, looks to be investor who predicted the market crash back in 08, has taken out puts on these two big stocks, which is very surprising considering how popular Nvidia is. Especially Palantir is definitely a newer and up and coming artificial intelligence company, but AI with Nvidia is surprising to say the least. So let's get into why this is the case. So Palantir raised its full year revenue outlook to $4.4 billion and beat estimates for the third quarter revenue. So what that was referring to, the earnings report that came out for Palantir, which I didn't get to cover yesterday, but they had a very good quarter three earnings report, which isn't a surprise at all considering how they really dominated the marketplace when it comes to artificial intelligence, having business deals with Saudi Arabia, with Israel, with the United States, and probably other countries around the world. And they've really taken over with defense technology as well. Ever since the war between Israel and Hamas back in 2023, they really took off in a lot of ways. So today the shares fell 7% due to the stock's valuation concerns. And here's another thing too. So President Trump said that the U.S. would not allow Nvidia to sell its chips to Chinese buyers as a matter of national security. So this really hurt Nvidia because obviously they have a huge market in China. Earlier back in the summer, they were allowed to manufacture chips in China, but now they cannot sell chips to China due to national security. So that's obviously going to hurt Nvidia stock, and that's why they fell as well today. So that's sort of the summary of what's going on with those two stocks, with both Palantir and Nvidia. So let's get into this video. And I wish it was pop up right now. Looks like it's there. We go. Let's get into the analysis that the Yahoo Finance makes on this. Then I'll try to find some other analysts as well, because this is definitely something we shouldn't ignore, in my view.
Questions about the valuation side of it, to Dan's point, and it looks like one of the people hinting in that direction is one of the people who made his name during the financial crisis.
Yeah, Michael Burry, the hedge fund manager who called out that 2007 financial crisis and the collapse of the U.S. housing market back in 2007, has now put a sour note on this AI trade, perhaps one of the biggest calls on this bubble risk that we've gotten so far, that kind of puts a little realness to what could happen over the next few years. And so what happened overnight was this hedge fund manager, Michael Burry, bought put options on 1 million shares of NVIDIA and 5 million shares of Palantir. Just to
Hold on. 1 million shares. 1 million shares. So let's, for context, let's see how much money that would cost to actually do that. So if we look up the price of one stock of NVIDIA, let's see, because I'm really curious now. So it's 198. Let's say we don't know obviously the price that the investor put, like, or his order for the put, but let's say he did something like Nvidia's going to fall to 175. Let's say that. So if you do the math on this, it would be, hold on, it's a little bit slow today. It looks like it's loading for a while. Okay, it'll be something like 175 times 1 million. Let's see, can't even see properly here. Yeah, 1 million shares. So basically that's, I wish I had the comments here and make it easier to see. Basically $175 million about. So that's how much capital that's how much money this investor Burry is putting in to this. And the ultimate saying goes, you put your mouth where your money is, and he's doing that. And I think this is a really big deal for people to pay attention to, especially because there's so much talk about how the stock market is breaking records left and right. And again, we haven't seen a bubble or stocks really this high in a very long time, or if ever before. And it's definitely concerning in my view, but let's see.
Understand how much exactly that is. 1 million shares would be about a valuation of $187 million. And those 5 million shares of Palantir, well, that equates to about $912 million. And so a pretty significant bet here that Michael Burry is making on both of these companies, as all we've been talking about was the valuation of both of these key players within this AI arms race. And yesterday after market close, he went on to X and he shared a pretty interesting post. He basically pointed out one or a few charts, but one in particular was about the cloud revenue segments for Amazon, Alphabet, and Microsoft. And what he pointed out was that during the years of 2018 to 2022, we saw returns of 36%, 45%, and 22% for these three companies. And over the past few years, the return on both of those, or rather all three of those cloud segment revenue, has been significantly lower. And what he said with this graphic that you're seeing now on the screen was, these are not the charts you're looking for. You can go about your business. And this was after this filing had come out. This was based on a regulatory.
This is really interesting. So Burry is basically betting that NVIDIA and Palantir are going to take a similar route in decreasing, not having as high of a growth, pretty much. And I could see that could definitely be possible, considering that NVIDIA really, as well, Palantir spiked tremendously. And I believe a stock like Palantir is definitely more volatile than a stock like Nvidia. So that completely understand his point of view with being bearish on the stock. But Nvidia is really interesting because it's spiked so much. I think it had a year-over-year growth of almost 100%. So seeing that growth average slow down is definitely logical.
Filing that for the quarter that ended September 30th. And so we're now just getting it. And it's definitely causing a bit of fear among investors this morning.
Yeah, definitely. Even though it's all sort of hints and insinuations. He's not coming out with sort of a long screed on all of this. He just dropped those things that you talked about. Now, we are also at the same time, just coincidentally, getting some commentary from big asset managers who are at a conference in Hong Kong, and they're also talking about valuations.
Yeah, that's what I covered earlier. So here what we're seeing is two really big influences right now in the market. So a big time investor publicly stating he's putting his money where his mouth is and betting on and putting it on puts against Nvidia and Palantir. And we're also seeing the biggest bank corporation CEOs and leaderships in the world, such as Morgan Stanley, Goldman Sachs, Capital Group in Hong Kong, basically coming to a consensus. And I'll speak only on Goldman Sachs' behalf because, or what the Goldman Sachs CEO said because of his statements. But it seemed like everybody was on the very similar page about that there's going to be a contraction, to say the least. And it's really interesting what we're seeing about this. And there's another article here that I like to get into, which is the analysts surveying the analysts studying why Palantir's earnings, or the stock plunge, due to Palantir's earnings, even though the earnings were off the charts. They were excellent. But why is that? Why is that the case? So we're going to try to understand this together here. So, okay, we understand it fell down 9%. We understand that. So let's see. So the shares were up 150% this year. 150% the shares were up this year, leaving it among the best performing stocks in the S&P 500 in 2025. So back in 2024, this stock, I've heard about it. It was around like $40-ish, $50. It was kind of lingering here and there. But this year it really took off, and many investors were very excited about it, especially those investors that invested in it back 1, 2, 3 years ago. So, but here's the reason why, there's some pullback about it. Palantir's slump comes amid the growing worries about a bubble, including comments from Goldman Sachs and Morgan Stanley executives at a Hong Kong meeting, which I showed you the video of earlier. Those who didn't see that video earlier, basically those two CEOs and leaders were talking about how there's going to be a contraction in the market. So Jefferies analyst states, quote, Palantir's numbers are great, but called its valuation extreme relative to its fundamentals in a note. They issued the price target of $70, less than half of its current value. William Blair and UBS analysts have also stated neutral things for the stock, voicing concerns of Palantir's valuation would make it one of the more expensive names in software on a free cash flow basis. So they're basically saying that I guess according to the earnings report, that many of these top firms are saying, hold your horses, Palantir. We think you're overestimating yourself due to this spike in growth. So that's sort of what's going on here. I think that's pretty much the main gist as far as the Palantir and Nvidia goes. And I'm really curious to see what happens, because let's get into how Nvidia reacted with President Trump stating that they cannot sell their chips to China. So I think that's a really big deal. So let's get into that one. Because I want to do this story yesterday, didn't get a chance to. So let's get into this here. So Nvidia cannot sell its most advanced AI chips to China, White House says. Trump administration is not planning to allow Nvidia to sell its most advanced chip, known as Blackwell, to China right now. Quote, as the most advanced chips, the Blackwell chip, that's not something we're interested in selling to China at this time. Of course, it's behind a paywall. Okay. Let's go to Yahoo Finance. We know that's That one's fine. So let's see. So looks like there's not much information about it. It's just an announcement that they're not interested in it. Again, the Trump administration has changed its mind on a lot of different issues and items. So I wouldn't be surprised if this were to change in some capacity in the next month or so. But as of right now, there's not much information on it. So we're going to go into, let's see, something else here. There wasn't a ton of news today besides those two really taking the huge headlines of the news that really caused the stock market to really crater down. But let's transition to the Supreme Court regarding President Trump's tariffs and how they're going to be hearing arguments about whether the executive branch can use unilateral control of tariffs, of taxation on imports without congressional approval. And this is something that, in my belief, I think the Constitution is very clear that that Congress has the, quote, as I learned in school, the power of the purse. And that is that they have that new taxes, new taxation on imports, on anything needs to be passed through Congress. And that's something that I firmly believe. And the Constitution backs that statement up. And so this is why there's a lot of arguments, lots of discussions regarding tariffs. So according to a Bloomberg article, President Trump has worked fast in his second term and much more than his first term with yielding tariffs, wielding unilateral power to reassert American dominance in the global economy. For a few hours of Wednesday, the world will get clues, as to whether any U.S. institution is willing to rein him in. So this is going to be tomorrow, looks like. Excuse me. So in a high-stakes legal showdown, the Supreme Court will consider arguments that Trump exceeded his constitutional authority with many of the sweeping tariffs he has imposed on goods from around the world. So as you can see right here, so Trump's tariff take rose in first term, soared in second. So we can see from when he was first elected, 2016 to 2020, it went up a little bit in 2019, but it was in 2020, it definitely went up pretty high, but it was relatively stable for the majority of his presidency. And what we see now is in his first term, President Trump was announcing tariffs on China mostly, not really any other countries. I could be wrong, so don't take my word completely on that. But for the most part, President Trump was targeting China on some tariffs, and that was it. But now he's targeted the European Union, Japan, South Korea, Brazil, China, India, and etc. Many other countries that I don't remember off the top of my head. And so this is why there's a major increase in tariff monthly revenue in his presidency in 2025, as you can see right here. Obviously, it doesn't make much of a difference when it comes to balancing the budget or anything like that, because the U.S. government continues to spend money that it doesn't have. I believe the U.S. economy hit recently. Let's see what it is right now, because I want to be clear. Yes. So it surpassed $38 trillion, the federal government, recently. So they're continuing to spending money continuously. And this tariff revenue, as good as it is for having more revenue, even though it's coming from the U.S. taxpayer, it's not really helping with balancing the budget or anything like that. So I just want to make that clear. So, of course, President Trump is claiming this is life or death for the United States, because this is one of the biggest things he ran on. This is one of the biggest executive powers that he has. And this executive power wasn't really checked on before, because we haven't had someone in the executive branch really use or wield this sort of power, this sort of using tariffs as a means of negotiation, but also as a means of intimidation in some ways as well, that President Trump has done. We haven't seen that before in a president, at least over my lifetime, and I'm a pretty young guy. So it's very interesting to understand where this case is going to go. So the betting markets this week assigned that there was about a 60% chance of Trump losing the case. So wow, that's pretty even considering there's a conservative majority in the Supreme Court. Wall Street firms have also been buying up the rights to potential refunds, betting a loss for Trump would see billions in tariffs returned to companies. So that's the thing. So companies, as good as President Trump has been for big business with the big beautiful bill that passed and all that, these tariffs are not great for big companies because they're going to have to increase prices on their consumers, and in doing so, that's going to hurt their revenue. Or excuse me, when the tariffs are imposed on the company, they have to pay more if they don't pass it on to consumer. And obviously, they're going to pass on those price hikes to the consumer due to these tariffs. So it's just there's a lot that goes into this case, because I don't know how that's going to work in the sense of, are all the tariffs just going to be canceled, all these dozens of tariffs, or not? We're going to see, because yeah, as you can see right here, like tons of tariffs, like so many tariffs here. So let's see right here. One key question is considered: if Trump loses his Supreme Court case, his government would be ordered to refund the tariffs. So looks like they have to refund all the tariffs, which would deprive the Treasury of revenue and push the budget deficit higher. Wow. So they'd have to refund all that money. Wow. All those tens of billions of dollars. So yeah, I'm really curious to see what happens because of that. Okay, let's go into this next article here. According to Bloomberg, we'll see if we can access this. Doesn't look like we can. Maybe. So yeah, looks like we can't look into this, but a wave of U.S. layoffs flash early warning sign of the job market. So let's see if we can even look at any of the job numbers, because since the government shutdown, we really haven't had access to any of the numbers at all, how the job market has been. So let's see if there's any data today or in the last week or so. Okay, so it looks like it comes back tomorrow. Okay, so the October jobs report, not the government bureau, I don't think it's a BLS report, but the jobs report comes in tomorrow. The ADP one. So this person's saying expect a modest rebound. Let's see what this is about. So economists anticipate U.S. private employers added 37,500 jobs in October, a reversal from September's loss of 32,000 jobs. Weekly ADP data showed private employment grew by an average of 14,250 jobs per week in the 4 weeks through October 11th. Okay, so there's some evidence of weekly gains, so that's why obviously the headline is saying it's going to be a modest rebound. And my hunch is that if there is a modest rebound, if there's job growth and not job loss tomorrow, then I believe that the stock market is going to rebound, because the stock market wants to look for other ways for there to be positive momentum, considering the massive hit that it took today with stocks sliding. So yeah, there's not much in this. This looks like it's mainly more commentary than data. So yeah, so we'll just look into the other one. Let's see. Let's look into a Bloomberg or a Yahoo Finance video here. Let's see. I'm not going to watch this 43-minute video here, but just going to click it to get into the YouTube here. But yeah, so I'm curious to see what's going to happen, because I think it's really difficult for people to make assumptions with what's going to happen in the stock market, because you would think due to the government shutdown that's happened 35 days and counting with no end in sight, that the stock market will really be in shambles with the TSA, air traffic controllers not getting paid. Government workers haven't been paid for over a month now, and a lot of this stuff is really bad news. So that's why I think that the stock market isn't a direct reflection of the economy completely, because of the many, over 1 million Americans that are struggling just to get a paycheck. And now there's tens of millions that aren't going to get SNAP benefits. I think it's like 40 to 41 million Americans because of the government shutdown. So this is a pretty big deal. Now, the courts stated that the Trump administration has to use some of its emergency reserve, to partially fund the SNAP benefits. But again, that's only a temporary means. That's not going to help every single American. Okay, so let's see if there's anything else new here. Okay. Yeah, it doesn't look like anything too new here. New Jersey governor race is going on. Today was election day, so definitely some elections. Not a ton of elections, but the New York mayor election being one of the biggest headlines of Mamdani, who's he describes himself as a democratic socialist, having a big lead and is favored to be the leader, the winner of the election, from what I've seen. But yeah, it looks like that's all for today. Yeah, not a lot of news today. So yeah, that's going to be all. Thank you guys so much for listening, for watching the show. Please like, share, subscribe to the channel. Comment your thoughts below on anything you'd like me to react to dive into deeper. Maybe you want to critique how I analyze news. I'd love to hear your feedback. So yeah, let's and gold holds as drop, investors weigh outlook for dollar. Okay, actually, you know what, we gotta read this article together. One more article here on gold. So gold holds as drop, as investors see drops in other stocks pretty much. So let's see what's going on here. So gold held the biggest drop in more than a week after the US dollar rose to the highest since May. Okay, so gold looks like, gold held steady today, so I don't know exactly what they're saying here. Oh, geez, I don't know why it keeps... Oh, man. Gotta get the monitor set up soon. Okay, so bullion steadied around $3,900 an ounce after sinking almost 2% in the prior session. A gauge of the U.S. currency rose for a fifth day today, its best run since July. So the U.S. dollar rose for a fifth consecutive day. That's the first time that's ever happened since July, a few months ago, as traders reassess the likelihood of another interest rate cut from the Federal Reserve. A stronger greenback makes commodities like gold more expensive for buyers. And why is that? Because when you cut interest rates, that is going to make borrowing less expensive, and thus that is going to inflate the U.S. economy. So it's going to inflate the dollar. So when inflation happens, gold, silver, commodities become more in higher demand and more expensive. Obviously, I could go into a lot more deeper than that, but I'll just stop there for now. So gold remains about 50% higher year to date. The value of gold has 50% or higher. It's remained year to date today, with prices touching a record last month before retracing some gains. The pullback was accompanied by withdrawals from bullion-backed exchange-traded funds, although the pace of outflows has tailed off in recent days. So yeah, so I just wanted to read this article real quick because gold has been huge when it comes to holding its value compared to other assets, especially when it comes to a lot of the stocks and bonds, with many central banks having a very high demand in getting gold. And we've seen this with gold stocks. We've seen this with gold mining stocks that have had incredible gains this year. And it's all because of sort of the bearishness in a lot of stocks. And this is what I think is really going to be interesting when it comes to gold, and seeing how it's going to correlate with equities when the correction happens of around 10%, according to that Goldman Sachs CEO. How is gold going to respond? Now, typically, when there's any sort of economic worries, I wouldn't say contraction, because contractions are typically normal and necessary and nothing to be afraid of. But if there is an economic downturn, something with real big concern, then I think gold is going to at least increase somewhat. Again, I'm not a financial professional or advisor, so don't take this word for gospel or anything like that. But I do believe that we're going to see gold really maintain its value because we've seen that. Gold is up 50% year to date. So we've definitely seen that be the case. Whereas the US dollar only just recently is starting to regain its value, but it took a major hit since the beginning of 2025. So again, thank you all for listening. Just some quick news there with gold. This is a more bearish headline saying gold will struggle to match recent highs. I think that's normal. It's going to struggle a little bit to reach that really high mark it was at before. But again, when you own gold isn't to make money. That's not the point of gold. Gold isn't like equities where it's just going to keep spiking up and down, up and up. Gold is for maintaining your wealth and protecting your wealth, hedging against inflation, hedging against economic collapse, economic downturn, things like that. So this isn't really a concern when I see this headline, because it's not supposed to be going up a lot on its own. If anything, it only goes up when we have major economic downturns. And usually that's when it's a negative thing for most people, most Americans. So yeah, that in a nutshell. Please like, share, subscribe to the channel. Thank you all for listening. Again, I'll be live here at 8 p.m. Monday through Thursday. And thank you all so much.